Welcome back, Crypto Crew. I'm Corbin Fraser, and this week's news is sizzling hot. Trump's going to be back in the White House. Congratulations, President Trump. Bitcoin smashing some new all-time highs, and even pension funds are jumping into Ethereum. We've got a whole bunch of bullish news that you need to know about, including some very, very insanely bullish price predictions. So get comfy. Let's break down the biggest stories shaking up the cryptoverse, and let's roll. So there you have it, folks. Donald Trump has clinched the 2024 presidential election, crossing the 270 electoral votes threshold in the early hours of the morning after Election Day. During Donald Trump's victory speech, he declared, "We made history." And Bitcoin took the opportunity, of course, to make its own history by smashing its previous all-time highs. So thank you, Bitcoin, and thank you, President Trump. And with it, analysts at Bernstein are sticking with their prediction of Bitcoin reaching 200K in 2025. Trump's crypto-friendly stance could push Bitcoin to 90K by January. Long-term, though, Bernstein sees big players like Wall Street driving Bitcoin demand regardless, calling this institutional interest in Bitcoin a watershed moment for the growth rate on BTC. Ripple's CEO, Sebastian Serrano, goes even further, and he believes Bitcoin could hit $1 million by 2030 due to the US's rising debt and inevitable dollar devaluation. So as debt keeps growing, he predicts a need for dollar printing to meet obligations, making assets like Bitcoin a very attractive hedge. Serrano says traditional investors may turn to gold, while younger investors will favor Bitcoin as a secure asset. He aligns with views like Bitwise's Matt Hougan, who also sees Bitcoin as a protection against currency mismanagement. So Serrano explained, quote, "In the long term, the fiscal state has no other option but to devalue the currency. The US debt is already $35 trillion US. Vaneck's Matthew Siegel aims even higher and predicts Bitcoin could hit $3 million by 2050, driven by its potential adoption as a reserve asset by central banks. He links Bitcoin's rise to economic shifts, especially in the US election, and sees a bullish setup ahead. So Siegel also highlights Bitcoin's adaptability and growing importance in global markets, forecasting Bitcoin could reach 180K after the election. David Bailey, former Trump crypto aide and CEO of BTC Inc., predicts the nation states are about to dive into the Bitcoin market big time. He believes several nations are already testing mining programs and will soon move towards building Bitcoin reserves through central banks or sovereign wealth funds. Bailey emphasized the Overton window has shifted so dramatically on this topic. I think we're just months away from a nation state or a few entering the market in size, billions of dollars every month. The Bitcoin Policy Institute, or BPI, just dropped a report pushing for a US Bitcoin reserve to boost economic stability and global power. The idea? Holding Bitcoin could help protect against currency devaluation, give the US an edge over rising digital currencies, and even drive energy investments. It also highlights the potential for financial inclusion and democratic values. The BPI suggests a careful, phased approach and calls for policymakers to think ahead about integrating Bitcoin into national reserves. Also, at an all-time high, Bitcoin's mining difficulty has hit a historic 101.65 trillion, making it harder than ever to add new blocks to the blockchain. This increase means miners need over 101 trillion hashes to mine a single block, intensifying a competition and driving them to maximize efficiency. The network's hash rate recently hit an all-time high, but as difficulty rises, only the most powerful setups will thrive in this challenging environment. This means this prices out a lot of the small miners. Of course, there's always going to be some crazy solo miners, which, hats off to them. I love the hustle. Bitcoin interest has spiked recently, with Google Trends showing a rise in searches, especially since late October when the price uptick started. So on a global scale, Bitcoin hit the maximum score of 100 on October 29th, with El Salvador and Nigeria leading the charge, followed by Switzerland, the Netherlands, and then over to Austria. Over the past 5 years, search interest dipped to a low of 17 in mid-October of this year. The surge reflects growing curiosity, likely sparked by all of the price movement, and shows Bitcoin's continuing relevance across the globe. As the dust settles on US election, investors seem to be shifting their focus away from the political chaos and towards a possible Fed rate cut that could give the economy a lift. Money printer go burr. Markets are betting big that lower interest rates will encourage spending, while Fed support could keep things steady. For now, it's the Fed's move, not the political scene. So, I think we're all going to be watching that over the next little while, now that the election has slowed down here. Switching gears, and the state of Michigan retirement system just dropped over $10 million into Grayscale's Ethereum ETFs, specifically the Ethereum Trust and Mini Trust. So this move follows a trend of pension funds exploring crypto, with Michigan also investing in ARK Invest's Ethereum ETF earlier this year. So it's part of a bigger shift, with more traditional funds like those from Wisconsin and Houston's firefighters making crypto plays. So it looks like retirement funds are warming up to digital assets like Ethereum, signaling crypto's growing acceptance in mainstream finance. And across the pond, over in the United Kingdom, pension scheme has made history by allocating 3% of its portfolio to Bitcoin. This impressive move aims to diversify investments and tap into Bitcoin's potential for long-term growth. Despite economic challenges, Sam Roberts, the director of investment consulting, explained, integrating Bitcoin into a pension scheme's investment strategy is a bold step that reflects the forward-thinking nature of the trustees involved. Security and risk management are key, with strategies in place to handle Bitcoin's volatility while benefiting from its growth. This could set a trend for other UK institutional investors to follow. And back to the US, Coinbase has uncovered 20 instances where US regulators allegedly pressured banks to cut off crypto services, pointing to what they call Operation Choke Point 2.0. This effort, revealed through a Freedom of Information Act lawsuit, shows regulators telling banks to pause or stop offering services to crypto companies. Coinbase argues that this is an unfair crackdown on compliant businesses, and they're pushing for full transparency about the regulators' actions. However, while Coinbase is fighting for transparency in the crypto space, they have been caught in a bit of a listing fee controversy. So CEO Brian Armstrong claimed that they don't charge for token listings, unlike Binance, which allegedly asked for about 15% of the token supply. But founders Andre Cronje and Justin Sun disagreed, saying Coinbase asked for huge fees, up to $300 million for Cronje's new Sonic project and $80 million worth of Tron. As Bitcoin begins its mission to the moon, we have an exciting announcement from our last story of the week. Gemini just launched a campaign called Go Where Dollars Won't, highlighting crypto's potential beyond traditional money. They teamed up with sci-fi artist Matt Griffin, known for his work on Dune and Star Wars, to create visuals showing futuristic, borderless financial possibilities like Martian safaris and asteroid skiing, all paid, of course, with Bitcoin. So the campaign aims to show how crypto is flexible, forward-thinking, an alternative to fiat currency, with a global ad rollout across major cities, bring in that hype. And that's a wrap for this week. Markets are buzzing. Bitcoin's breaking barriers. Big moves are reshaping the landscape. So keep your wallets close. Keep on that research train here over at Bitcoin.com news. Follow along. Don't forget to hit the follow, like, retweet, smash, like, all the other nonsense, and then we'll catch you guys next time. Thank you again for joining us, and congratulations, America, on a pretty fun president.